Hello guys, welcome to Jacklife US. Today's video topic is how to make money from expensive stocks. Let's go. So how to make money from expensive stocks? First, we need to ask a fundamental question. Why from expensive stocks? Why not buy cheap stock or penny stock? Expensive stocks are usually expensive for a reason. They're backed by real numbers, revenue growth, free cash flow, and proven business performance. Take COSTCO, for example. It trades around $1,000 per share, and that price is supported by strong fundamentals. In 2025, COSTCO delivered 8% annual revenue growth and an impressive 18% increase in free cash flow, reaching $7.84 billion. This is a company people trust. We shop there all the time, and the financials reflect that stability. Now look at NVDA. After its 1-to-10 stock split, the share price sits around $211. But the real story is behind the price. NVIDIA's revenue growth and free cash flow are exploding at a pace even faster than COSTCO's. That's why the stock looks expensive, because the business is performing at an extraordinary level. In the stock market, price alone doesn't tell you whether something is expensive. The fundamentals do. Strong companies with strong cash flow naturally command higher share prices. Expensive stocks have one big advantage: real liquidity. Liquidity simply means the stock is easy to buy and easy to sell. You get 3 benefits. Number 1, high trading volume. There are always buyers and sellers. Number 2, a narrow bid-ask spread. Buy and sell prices are almost the same, so you don't lose money entering the trade. Number 3, price stability. Even large orders barely move the stock. That's why high-quality stocks trade smoothly, and why liquidity matters. Expensive stocks are much harder to manipulate. Big companies move on real data, not rumors, not hype. Take NVIDIA as an example. Even when famous investors like Michael Burry publicly said he would bet against it, the stock didn't care. Why? Because massive companies don't move based on opinions. They move based on earnings, revenue, and real fundamentals. That's the power of large-cap stocks. They're too big, too liquid, and too widely owned to be pushed around. As long as there is no big policy change by President Trump or the new Fed chair, big stocks are hard to be manipulated. Now let me show you how to make money from expensive stocks. The first way to buy expensive stock is straightforward: direct buy. You buy it at low price and hold it for a long time, typically over a year or several years. I personally prefer to buy stocks showing strong real revenue growth and positive cash flow. Cash is the king. There is a public, popular YouTuber in Los Angeles called Lowly. On July 20th, 2024, he started a stock experiment. He put $200K to buy stock, and once he chose those solid growth stocks, he rarely changed it. As of today, $200K increased to $310K, an annual growth rate of 34%. Look at those stocks he buy. The key to his success is he mainly chooses expensive and/or high-growth stocks. This is the power of solid, expensive stocks. You can hold it, just let the time do the magic. The second way to buy expensive stocks is to use sell-put option method. Sell-put option, done it right, has one or another outcome. Either you get 100 shares of a stock at a cheaper price, or you get a premium, typically way better than normal dividend. DROM is a memory ETF, which contains many big growth stocks such as SNDK or Micron Technology or Samsung Electronics. On May 11th, 2026, DROM was $53.50. So I did a sell put $60 with expiration of May 22nd, 2026. I received a premium of 7.55. This option means I am obligated to buy 100 shares of DROM if the price of DROM is below $60. On May 22nd, 2026, DROM price was $52.75, lower than strike price $60. So I get assigned 100 share of DROM at $60. But since I also received a premium of $7.55 per share, the actual stock price is $52.45. Today DROM price is $63, and I am making money more than $10 per share. Now, the third way to make dollar from expensive stocks is to use vertical spread option. Depends on bear or bull, for different spreads can be used. I use mostly put credit spread when I think a stock is going up. I also use call credit spread when I think a stock is going down. I have did 2 separate videos on these 2 options. You can check them for details. Microtechnology, MU, is a big, solid stock, but recently it skyrocketed by $454 within a month, a 90% increase. However, it is not a straightforward up. You can see the red arrows, pointing to many downs. That's when I decided to use put credit spread options on MU. I did a total 7 put credit spread options on MU. The collateral is $4,500. As you can see, if I close all the options now, I can walk away with $1,193. However, since MU keep going up, and I expect I can earn a total $1,550 in June. That's a monthly ROI of 34%. So to be clear, to use put credit spread on MU, I don't own any shares of MU, but I bet on MU to be above $605 to $695 in June. Win or lose, I always got my premium back. If I see the trend is not right, I can choose to close early to lock in the profit. Another example is big stock SNDK. Its current share price is $1,683. On April 29th, I did a put credit spread $949.50 with expiration date of June 5th. With $1,000 collateral, and I chose to close early on May 29th, easily earned $390, a monthly ROI of 39%. In summary, today I talked about how to make money from expensive stocks. There are 3 ways. First, you can directly find good solid expensive stocks, buy and hold it. Let the time do the magic for you. Second, you can use sell put option on a stock to get shares at a cheaper price. Lastly, you can use vertical spread options on big stocks, especially put credit spread and call credit spread, to get a monthly ROI of about 30%.
If you find this video is useful for you to make money from the stock market, please subscribe Jack Life US. Let's make money together and grow our wealth. Thanks for watching.